Hey, good morning.
Good morning, Mark. How are you?
How are you doing?
Good. Good to be on the call with you. What an honor.
I wanted to reach out actually, yeah, already earlier, but never found the time. So I thought maybe book a call right away. So yeah, finally.
Fantastic. Well, did you get a chance to watch my short little video?
Yeah, I watch it.
Fantastic. Thank you for doing that. Saves a bit of time because we can concentrate on your story and how you got into real estate. Tell us why real estate and what it can do to help you.
Oh yeah. Um, I got into real estate. Let's say 2016. I really started with investing. Bought my first apartment. And then 16 to 18, we bought like up to 12 apartments and
All
we
right.
self-managed them with tenants in, and then later on sold half of them. Um, then I came over to the US and wanted to start something similar
Hmm.
and was confronted with the credit system. And we didn't
Yep.
have any credit,
Where did you come
And
from?
I'm from Europe, Germany.
Okay, Germany. Okay, because I came from
Yeah.
England, you see, so I understand what you
Oh,
mean.
I've been to England a lot, right? In my earlier days, was in Brighton and Eastbourne, York, and London a couple of times to learn the language,
Hmm.
and was fortunate enough to have that privilege to just go over to England and practice. Yeah.
Hmm. Very
Um,
good.
Yeah, and yeah, from there we went over and then we had some cash because we sold some of the apartments before we came over, and we also sold our private residence.
Hmm.
And then we saw, okay, with the cash we can only do so much, right? And so we ended up, because we don't wanted to have it sitting around, we bought one rental property in Texas, which we bought cash and we get some cash flow from it in on a regular basis. That's cool. But on the other hand, it ties up a lot of cash, and
Right.
we
Yeah.
rather would do like 10, 10 rentals with the same amount of cash as a down payment or something,
Hmm.
which would be the same strategy that we did before. And but it didn't work out because our credit score needs to build up, and you don't get a loan easily. And then I learned about DSCR. I also did my real estate license in the first year, um, which I actually don't use a lot. It was just the idea, being an investor and have maybe some opportunities, you can use a license pretty good to get a discount as well and stuff like that.
Right.
And then I was always intrigued by the idea of looking into multifamily, and I looked at some free resources online. I read a book or two. Don't remember I guess Peter Harris had a free book out there, and he has a free course and some YouTube videos. And also watch a lot of the Cardones
Yeah. Okay.
and other players in the market. Yeah, and so the idea is still there. But the problem is always getting my head around how I pull it off, because
Yeah.
it's a lot of money, right?
Right.
And
Right.
that creates some kind of hesitation. I'm not necessarily the guy who gets in a big project like that and takes the money from somebody else to
Hmm.
get it done. So I rather thought, how do I get the money for something like that? And then I came across Sub 2 and I was looking, oh, maybe I can get the money out of my rental and just use it for the entry fee for some Sub 2s and can build up a portfolio like that. And when I was thinking about that idea and strategy, I saw the Gator program and then I got hooked on that.
Right.
Joined Gator, and then I had returns better than rental returns on the money.
Yeah.
And then I questioned my rental approach completely because I was making a lot of money with the Gator thing, where you have returns. I mean, on a rental, maybe 10%, maybe 7%, whatever. And on a Gator loan, you do that within one deal and you can do it like 3 times a
Uh,
year or something,
Yeah, yeah,
right?
that's true.
And
Yeah,
so that got me hooked, and I'm in Gator ever since. And the main strategy was to build up capital with Gator and use that maybe as an entry down payment for something bigger or on down payments for sub twos,
yeah,
something like that.
yeah. You got a very similar path to what I've been through, so that's interesting, as well as
Yeah.
coming from Europe. So that's kind of cool. I started over 20 years ago, as you saw from the videos. So, well, I've been in lots of courses, had the shiny object syndrome too, and trying to work out what's the best strategy and what have you. And back in July, I found myself in the classroom, work 3-day workshop on large multifamilies. And the good news is, Mark, you don't need a lot of money or your own money. You can find the money. The money's out there waiting to be deployed in real estate.
Mhm.
Probably more money out there than at any other point in history. So it's just a case of networking within the community, finding out who's got the money and who wants to deploy it into real estate. And the nice thing about our community is we're all joined the community because we're interested in real estate, not in the stock market or crypto or all those other risky things, right? So,
Right.
yeah. So the good news is that you don't need your own money to invest in multifamilies. In fact, it's better not to. It's
Mhm.
best to bring the value to the table, and that way you leverage your way into the deal, much like Pace talks about, right? I mean, most of his money comes from large multifamilies. I'm sure you're aware of that, right? So,
Yeah.
yeah,
He he just explains the sub two strategies because it's a broader audience, right? And
correct.
can help to build the community, but the
Yes.
big money is made somewhere else. So,
That's exactly right. The large multifamilies. And the nice thing about the large multifamilies is the only niche in real estate where you can not only meet your financial goals in a reasonably short period of time, you can achieve that lifestyle that you're looking for, that time freedom, because you only need one or two of these deals and it makes that big change in your life and you go up
mm.
there. So
I found it very interesting in your story that you were like even broke more or less, right? And
I've been
then
bankrupt and down to my last dollar twice in my life where I didn't know where the next dollar was coming from.
and you rebuild yourself, and now you're in multifamily. And
Yeah,
I just curious, because using your own money is kind of the lazy way, right? Like you
it's
said.
not the way using your own money. You become poor by using your own money because
Hmm.
you're going to lose it. In real estate, it's all risk, about managing risk. So don't put your own money and bring the value, bring the education and the energy and the networking, the connecting, and do all that, right? So then while you're not losing money, you're leveraging into the deal and you're getting the rewards.
Mm,
Like for
that makes
example,
sense.
on large multifamilies, if on the GP side, I'm looking for general partners, I'm looking for a complex. I know what I'm looking for. If I find it, there's a
Hmm.
5% acquisition fee at closing. So,
That
so
goes into your pocket, right?
into my pocket right
Hmm.
away. So, for example, if I found a $20 million complex today, and we decided to buy it. 120 days from now, that's the new year, that will be $1 million because the 5% of 20 million is $1 million.
Yeah.
That's
And
after 120 days. So people say, oh,
120
large,
day,
yeah.
sorry, Graham,
Oh,
120 days is usually the time frame where you say you could pull something up like that.
yeah,
Uh,
usually there's a typical amount of time. It can
Hmm.
be 90 days, 120 days, 60 days is usually, from writing the contract, with the inspection period and things like that. So typically you can expect 120 days. Now,
Hmm.
as I say, I'm looking to get one, maybe two deals a year, so it's not like hold your breath and wait for one thing, you know. But when you do get that deal, it's totally life changing. You made all your money for at least a year or two, I mean, if you make $1 million, okay, a year, it's a year's
Hmm.
salary, but most of us don't make 1 million a year. For some people, it's like 10 or 20 years salary, right?
Yeah,
Yeah.
for sure. And also in that kind of league, you have different, like you said, 5% of that amount is so much more than 5% on a rental, a single
Yes.
family house
Yeah,
or
single
anything.
families don't make sense. I
Mhm.
realized that the first time round. That's why I got started into multifamilies to begin with, right, 20 years ago. But I made a whole bunch load of mistakes and
Yeah,
small.
that's more the fear in getting
Yes,
in and making mistakes with those big
yeah.
numbers and getting screwed by that. And
Exactly. Yeah, the financial losses could be catastrophic. And then if you need to take legal action, it's very, very expensive. But
mhm,
I found only a few weeks back, I came across Legal Shield, and that's like having an attorney in your back pocket. You can dial up your attorney for a monthly fee. And
mhm.
so I feel a lot better taking those bigger risks now because with that network of attorneys and they're experienced attorneys, the company Legal Shield, well, it's PPLSI, but that company pays the attorneys the retainer. So when you call them, they're not watching the clock and they're giving you advice. They've already been paid. And so the
Mm,
whole
that's good.
dynamic of that is fantastic. So you get much better quality service. And if you need to go to trial, they'll do up to 100 hours. They'll write letters for you for frivolous lawsuits like when I had tenants not paying the rent. You turn up in court. I used to have the mentality, well, they didn't pay the rent. I'm going to win the case, right? They didn't pay it. Turn up in court and they end up with free legal aid because they don't have any money.
Mm,
And the judge gives them another 30 days and they can do that up to 3 times. Well, now your losses are turning into quite something substantial. They're still in your apartment wrecking it. All right. So your losses can run literally into 5 figures. Now,
yeah.
if you had a attorney, they wouldn't stand for that nonsense. You'd get them out right away.
Mm. The eviction would be much quicker, right?
Much quicker the eviction
Hmm.
process. For example, that's just one. And I literally lost over $100,000 in uncollected rents and going to court on
Wow.
Tuesday. So if you're serious about real estate, you need an attorney in your back pocket, right? Like that. And it's
Yes,
really
especially.
low monthly fee. It's a bit like insurance. We have to have insurance on a house, we take out on a car, and things like that.
How
Uh,
much is the legal shield for an apartment complex? Like,
um, the legal shield, you get business one about 100 and it's around $200 for personal and business, or 200 a month on that. But you can pay a lot less. You can do a
mm,
small business one and a personal one for $64.50. So it's
wow.
yeah. So it's better than fire insurance, better than house insurance, life insurance, or any of the insurances.
Yeah, the interesting part is really that they go to court for you, and that's
Yes.
included up to 100 hours. And I was thinking about my gator business as well, if that could be a good thing if somebody defaults and you have to
Yes.
kind of sue him. And
Correct.
I know from debt collection services now, I looked into that. They take 25% of your money, or another attorney I
Correct.
They do it on an hourly base, or they take a flat fee of 40% of the money they
Yeah,
recover.
yeah.
And that's just crazy, right?
Right. So I put my link. You can explore the website and the services. It's tinyurl.com/G Norris if you want to explore that. I would highly recommend that you do that. I've got like peace of mind now. You can take bigger risks because you know you got an attorney on retainer for millions of
Mhm.
dollars, literally. So
That
it
makes
makes
sense.
huge sense. Yeah. Um, and I'm passionate about it because I would have still had all my apartments if I'd known about legal shields today.
Wow.
Yes, because I would have taken them to court every single time.
Good morning.
Mhm.
Yeah,
This is
and
Graham. No,
this is my YouTube channel, Mark. I'm putting that on as well. I'd encourage you to um, subscribe to that. I've got 21 videos on education on large multifamilies. You said you like free, that's free.
Yeah.
The 5 minute to 12-minute videos on different topics within large multifamilies. And I'm also publishing this book, should come out in a week or two. They'll be available on Amazon, Investing in Large Multifamily Solved, and also Demystifying Commercial Real Estate, which is these are the two books I'm
Mhm.
publishing.
Mhm.
15 chapters on there, which has got it all in there to demystify it and all the terms and technology, and you'll end up being an expert.
Yeah.
And you can bring that value then, as I was saying earlier, don't use your own money, by the way, for real estate.
Mm.
Pace preaches that all the time. That's the whole idea of his teaching, right? It's no money out of pocket.
Yeah,
Right?
that's right.
Yeah.
So you structure it like you are the general partner and you get investors. And you put it in a different LLC, I guess, right? Or the whole project.
Yes, that's right. Yes, yes. So for instance, with the large multi-family, if you wanted to do the gated deal, the EMD is around 100,000 all the way up to 1 million.
Mhm.
You could do a gator wrestle, come in as a business entity, um, roll the amount you put into it into an LP position, get quarterly distributions and a share in the profit at the end of the project, which is
Mhm.
typically 3 to 5 years. So, and it's not unusual to double the asset value over 3 to 5 years. That's our goal. So you will
Mhm.
be effectively doubling your money.
So you actively look for more or less properties with problems where you can optimize them, optimize rent structure,
Correct.
increase value.
Yes, the value adds, the reducing of
Uh,
expenses, bringing rents up to market value, improving the property, improving the reputation. We do
mhm.
C-class buildings in a B-class location.
Mhm.
So it's all on the channel. So I'm sorry we've run out of time. I don't, but
No problem.
yeah, but you can explore all that. We got all the resources, but the biggest thing is, as I say, is get your legal strategy in place, your risk mitigation. In Gator, you'll hear stories all over, including from Jake, who ran Elite Gator. He's
Mhm.
lost so much money, and the stories of people losing money and not having enough financial clout to prosecute and to sue and to recover that money. So I only came across them 2 weeks ago, and I was blown away that such a thing existed. So, I mean,
It's better than insurance, yeah, of
it
course.
is
Yeah.
way better than insurance, right? I mean, having a house fire is very rare, but we have
Mhm.
house insurance, all right, because of fire, right? We
Yeah.
have car insurance, and actually, yeah, I mean, there are a lot of car accidents, but how many have you had, really? I mean,
Yeah, the serious ones are usually pretty, yeah, they don't happen that
I
often,
mean,
right?
I've had a few car accidents, but if you look how much car insurance you pay, it's
Mm.
horrible. This is paying
Yeah.
for your protection of your business. And you make money, you're successful, you will be sued. The more successful you are, when they see money, people, they'll come after you, even if it's a frivolous lawsuit. And that's where Legal Shield shine, because they warn them with a letter. This 100 hours of trial, nobody can match that. Or they don't care if it's a frivolous one, right?
Of course, of
Yeah,
course. That alone is worth it a
it's
goal. Yeah,
amazing. Yeah,
it's amazing,
yeah, so
especially if you build up a portfolio and have high value assets in it. Yeah.
exactly, Mark. Well, I've really enjoyed connecting with you. Book another call with me if you like, if you have some questions.
All right.
Calendly.com/Graham Norris. More than happy to share anything I know with you, or anything
Cool.
I've come across. Yeah.
Yeah, I will check out your YouTube and subscribe to that. And I guess from there will be more questions coming,
Yeah,
of
that's
course.
right. Well, I'll be delighted to help you any way I can, Mark. And
All right, cool.
you have a great day. All right. Thank you for
Yeah, it was
joining.
great connecting, Graham. Really
Yes.
enjoyed
And
it,
you.
and have a great day ahead. All right.
Yes, you too. All right.
All
Bye bye
right.
for now. Bye bye.